Yeah, we got to step back for a second and talk about how it could swing like this. Because I think a lot of people are saying, look, get me out. It's too crazy. But I think it's swinging because there, frankly, is not enough money involved in the speed of the machines. We often talk about the speed of machines so fast that you have these situations like right now. You look at Meta, Facebook. There are sellers who are willing to sell below where there are buyers. Now, this used to be called a fast market, David, remember?
Yep.
But when you have a giant desk where a portfolio manager comes into the trader and says, look, I still have 1 million Meta platforms, and where can we sell it? The guy says, well, it's 233. And he says, okay, take a 220 low. And then the trader says, what are you talking about? We can destroy the stock. He says, I don't care. I never want to see it again.
Get me out.
Get me out.
Right.
And it's the get me out that a lot of people are confused by. In the same way that Amazon is, let me cover my short or let me get in. Now, what price are they saying if you want to go buy Amazon? Well, I don't care. Amazon's the winner.
I mean, yesterday, though, you had a lot of people doubting whether that Amazon number would be strong enough to sustain the stock, certainly. Then Snap
has different
the tale of two cities in one day.
Yeah, different demo.
And I don't think I've ever seen a stock down 20 during the day and then up 50 in the
the fear factor is incredible. But if you look at Amazon and be clinical about it, Amazon is not what we thought it was, right? Amazon Web Services. Remember, Adam Selipsky came there. He came back. He was there. He's at Tableau. Gets bought by Salesforce. He comes back. Amazon Web Services up 40%, $17.7 billion. Advertising was actually a little lighter, up 33%.
Yes.
It doesn't matter because what this says is, you know what? We're not ad-based. We're transaction-based. Alphabet, transaction-based. Facebook, ad-based. So what's the Facebook value proposition to the advertisers? We can tell you exactly how many people bought things from the ad. Well, we can't anymore because people opted out. So, look, is it existential for Facebook? That part is the advertising. I mean, right now.
But do you understand the difference between why Snap, which many expected would suffer similarly to Apple as a result of the privacy changes, did not? That Meta seems to be alone in a sense, because also Pinterest, and we saw Twitter shares down. Again, the concern about this may have been overblown
of the industry
coming out of Meta numbers. Clearly was.
Well, I think Snap is a different demo. You know, Facebook's now old, Insta's now middle, right? And then TikTok and Snap are relatively the same in terms of the younger people who use it.
But also, Snap didn't lose users to TikTok at all.
No, I'm saying,
right. But we were talking.
Demographic,
in the Meta call, Zuckerberg was calling out TikTok. Many thought it was more from a regulatory.
TikTok's going to be the biggest in the world.
All right, I know. All of which I'm just trying.
No, I'm saying
we're just trying to understand what happened at Meta that others aren't suffering from.
Well, I think that Meta uniquely had a really good ad business that is just not as good in the new world where we opt out, where it's easy to opt out. The value proposition that we all thought was there is now too amorphous. David Wayner, when he just said, look, it's $10 billion. You know, it's $10 billion. And you need metaverse, we need $10 billion. Then you start thinking, why were they buying all this stock back? But they do have a secret weapon, and it's the CEO, who has been battled before. And even after all the stock they bought, they still have another $40 billion that's hanging out. They can just go do. So, I mean, remember, these are not financially challenged companies. They're intellectually challenged, and that's a big difference.